My investment philosophy. Hi, I'm Scott Hamilton. I'm a certified financial planner, fee-only fiduciary. We have offices in Austin and Houston, and we work with retirees that are interested in a tax-efficient retirement. Okay, so today I thought we would review a little bit about my investment philosophy, and this is just kind of how I view how we should frame the investment strategy. So number one, the overarching concern is the overarching principle is broadly diversified, global, and low cost. Okay, that's number one. Then it's asset allocation. So this should be based upon your financial plan and your risk tolerance. So at this point, we have the overarching, and then we have an asset allocation, the two most important things. And then as we go further down, it becomes less important, right? The container is the third item, and it should be an ETF or a mutual funds. Mutual funds have been around for 40 or 60 years, and ETFs have blossomed in the past decade or so, and they're more tax efficient, generally have lower turnover, and I use active ETFs, and we'll talk about that in a future version of one of these videos, but we use active ETFs. And then the family that we use is dimensional funds, DFA, Dimensional Fund for Advisors. The reason why is because they're low cost, low expenses, low turnover, they're tax efficient, and we can also talk about active passive the discussion in the future, but they're kind of in the middle. They're a quant fund. And I like them because of their academic orientation. They came out of the University of Chicago, just totally enthralled with the academics behind it. They've got a 30-year track record. They're one of the top 10 fund providers in the nation. Just a great operation. And all right, so then let's talk. All right, so we went from the overarching philosophy, asset allocation, the container, the family, and then actual ETFs that we use. So what we want to do is build it can be simple but elegant. Doesn't need to be complex. You don't need 10 or 15 ETFs or mutual funds. There's going to be overlap. So the ones I design will have zero overlap. So for example, with Dimensional Family, we would have one for the US, one for emerging markets, one for international, one for bonds, and one for real estate. And you take those five together, you've got 80% of the world's best companies right there. You don't need anything else, generally speaking. In some isolated cases, maybe we do, but for the vast majority of people, that right there is very good. And then let's go to the next layer. We do weekly cash management. So if people are working, they make contributions, we invest those contributions on a weekly basis. And if they're taking the checks out on a monthly basis, we'll raise cash and reallocate the portfolio on a weekly basis. Now, full rebalances we do as needed, quarterly, semi-annually, kind of depends. And then importantly, we try to not change the strategy unless the facts on the ground change. And by that, I mean the financial plan. So for every financial planning client I have that I'm doing investments for, we have a plan. So if the plan changes, then maybe the investment strategy should. But we try not to react to market conditions, and that's the challenge. It's not easy to do. Anyway, so that's an overall high-level framing of the investment strategy, and from the top all the way down to the very tiniest detail. If we can be of any assistance, please reach out to our website, Hamilton Financial Planning. Appreciate your time. Thanks for listening. Thank you.